where uncertainty is on the rise. For me, those traders in those markets are playing according to what is happening in the environment, and that's why I said at any given time, as a smart and a successful investor, a design investor, you should understand what is happening around you, both your economy, external forces, how it's going to affect the market, the sectors where you are playing, and that will help you to know, kind of help you to know where you should also put your tent at that particular time. It's very, very important that you don't invest to go and sleep, or you don't trade and go and sleep. You must understand what is happening in the economy, what is the sentiment in the market, where is money going to. You must know all economic factors. Are they improving or are they disintegrating? You must have all this at the back of your mind. For that will help you to make what informed trading and investing decision, because you need to make decision that will help you to be in profit. And that is why you are in the market. I want to tell you that in any market you are trading, information is key. Very, very, very key, in that regard. That is why you don't trade blindly. You must ask what you are using to trade, what is guiding you to trade. That is why I will tell you in this class that a successful investor is the one that effectively combines its fundamental, technical, and also sentiment report to make what informed decision. Yes, you can add a common sense analysis, looking at cheaper stock and other stuff, but I tell you, the successful investor must combine fundamental and technical and the sentiment to read the pulse of the market, how is the traders or the market player, the psychology of people in the market is very, very important. And that is the only way you can stay ahead of the market, like I've said earlier. But we'll start from what is happening in the Asia market. I've said that globally, the market is all looking southward because of what is happening, in Iraq and Israel, and the latest bombing of Iraq nuclear site by US. All this is what market is interpreting. Yes, we can know that for Ukraine and Russia have almost going to almost 3 to 4 years now that the war started. And when it started, it was like a week. They run over Ukraine, but things have changed. You can see what is happening, and these uncertainties due to protection is also affecting global economic direction, and that is why most in the domain or most countries are looking inward to see policy that can drive their economy, policy that can help them to make informed investment decisions. That is why you must pay attention to what is happening in your domain. Yes, we know that no market operates in isolation. Funds will come from form of foreign portfolio, in form of inflow from outside, then also from within. You must know the direction of all this and what to attract those inflow from outside. Is there when there is no economic growth, when there is economic buoyancy, there's things are changing, or government policy. These are the things where nobody wants to run to, where there's uncertainties. That's why what is happening globally. Yes, some sector of the economy or business might also be smiling as I speak now. What is happening, in Ukraine and in Ukraine, Russia, Middle East, and the US now is telling you that the oil price are likely to go up. We saw the crash of what cryptocurrency just because of where US just bombed the world, bombed the Ukraine. Iraq nuclear site. You can see from almost 105 or 106,000 to what almost 100,000 or 101. If I can see what is happening now, I can tell you that is also how to invest. This volatility will create wealth for those that are not going to take action, because trading has to be risky. Because it's risky, you must also know how to play with your stop loss at any given time. Anybody that want to go into trading know that there's element of risk in trading or investing in the stock market. That's why when we are coming, you take away emotion from your decision, so that you will make inform your decision anytime, any day. Like I said, looking at what is happening in Asia. Asia stocks are sink after the US attacks Ukraine. Japan, what we call potential manager index also fall. Again, I will tell you this fall is very strong this time. It's a reflection of what the tariff impact, and also the high inflation rate after Japan has also increased the workforce wages. These are the things that is playing that in Asia market as to speak. Yes, even as also the whole Middle East also conflict is also escalating. That has also weighed on different markets, even in that zone, in the Middle East and all. And Japan, like I told you, stocks are also looking at that was seriously. At local market, they also separated from war, even the stronger than expected. The purchasing power, like we said, this falling also is also there that there's something is also also wrong somewhere. Why is wrong somewhere that are not coming together for investors to interpret? And that's why you see that market share there is also falling. And I tell you that following this and what you can see that the the tariff thing is also already showing in Japan, as I've said earlier. But I tell you, that regional market in that zone, we are seeing that yes, energy prices, like energy costs will increase. That has the also affecting. That also will part on inflation. You can see that most of the central banks in those zones, mature economy, recently some of them just cut their rates marginally. Most of them left their rate unchanged. But with this heating up war that we're seeing, how inflation will come, because when it's high cost of energy, I'll tell you there will be what inflation, because this will also be passed over to consumer in terms of price. That means all this kind of cooling inflation we have seen before, there's a trigger, or less able to nip this at the world, because if they're not taking this war might generate to something else. But I believe that the leaders will also apply wisdom and make sure that we have to manage the situation right now as we speak. But I believe that this bombing of Iraq facility is going to disrupt what oil supply and oil movement, and that tell you that most market or commodity or sectors are going to what I'm telling you, we're going to see some form of decline. But I'll tell you that if you look at Australia market, looking at the index now, is one of the worst performing this morning, even down about almost 0.8%, despite the slight what upbeat or improvement in what the producing margin for the month of June in that zone. But if you also look at what is happening really, in India, at the India index of 50 Nifty 50 index also is down. Before now we know that there's already been a Pakistan and India issue, but this global is also reflecting on them. Also, we have seen that South Korea and Singapore also is also in the red, respectively 0.5 and 0.7 as we speak now. Even when the US market is also remain flat as we speak, because I tell you, this entrance of US into this, Israel and Iraq conflict is bringing another dimension. That is why every investor are looking at the momentum change that we're going to see, because Iraq are also have Nova to retaliate, and nobody know the fashion they're going to retaliate, how it's going to cost. That's why most of the market in this mature economy are looking what southward as we speak, because of what escalating Middle East tension. I'll tell you, investors are watching with gain interest to see where things are going. I told you earlier that Japan positive margin is below expectation, even when that it's weakened despite the upbeat, oh, get me right. Japan positive manager as we speak now, is also looking up gradually, even when the market is also down as we speak. Weakened market despite what we're seeing an upbeat. For me, let's watch and see where it's going. The first time we're seeing that in the first time in 11 months that we're seeing that the local output or inventory help to offset the soft demand. Let's see how it goes in there. But if you look at the service sector for that Japan, we'll see it's a fast growth, indicating that local demand was also improving in that environment. We're all focused on what on Tokyo, inflation data for what for the month of June, due on Friday this week. Hopefully, by God grace, these are the things that is happening in Asia environment. We'll come back to see what is happening in Europe. Europe is not left behind. I'll tell you what is happening also already in the Middle East. Also telling on Europe. Don't forget that Europe, largest economy, which is Germany, has business to do with China and all those zones. But with the war, everyone is watching. All eyes are on what the next action will be, especially the kind of retaliation we're expecting to see from Iraq on this issue, or are they going to broker peace at this time? No, I know that yes, I've seen the move of Chinese president also to broker peace. Why Russia is still watching? Well, I believe that there is a time, for these big countries or all countries to come together and also broker peace for this region. That of Ukraine and Russia don't know where they are going again. Even when Trump was making moves to broker peace, we have seen can't find the tail nor the head from that movement. But let's see again what this was going to contribute to the world. That means the global economy for global, we might experience some setback, but less as we are crossing to the second half, we're going to see a change in that environment. That will also be a good thing if it happens. But as we speak now, you look at US market. US market is flat, muted, but why oil prices are jumped afterward, aftermath of the sudden US strike on the Iran nuclear facility over the weekend. And uncertainty is surrounding the kind of response that you get from this Iran. These are the things, but I'll tell you, crude oil price has gone as high almost at 76.85% right away, and this to tell you that yes, if we continue, we might see inflation, rebounding, or kind of bouncing back across the globe, and that is what will be a major also problem in managing what rates. That means automatically there will be better from all these rate pulse we have seen and also cut we have seen for most of this mature economy. But also in US was the Senate also passing aiming to pass the Trump back function or the Trump back fiscal world bill, and the traders are keeping their eyes on this to see with also all eyes also on the business activities that is due today in US to see the policy manager also in that zone, also in that environment, is there to tell us how the economy has expanded the month of June. Well, like I said earlier, all the indices in US, both and June, NASDAQ and S&P 500, I'll tell you that most of them are unchanged. Why? Two of them are unchanged, while the other ones have slid down by 0.1% as we speak now. I will tell you that the Wall Street is really in red on Friday, and that trade mode is what we're experiencing right now. Most of the investors are very anxious and eyeing development in world in multiple days to see a bomb air war between Israel and Iraq and all that, and the potential involvement of US military force in this conflict. These are concerns and uncertainties that are surrounding most of the major markets of the world. Seeing yes, oil price gone high, after US strike, which I've said earlier, you can see that the market is also looking at what is going to happen before any move right now. But I believe that as investors are eyeing, expecting or eyeing Iraq move, that also like people are still on the fence, and that's why the market is a bit flat and moved over in US and most of the market also. I believe that as all eyes are still on economic data or calendar, investors need data to see the business activities figure for the month of June. Expecting that there will be an improvement, if no, or to reflect the impact of what tariff for the S&P Global Manufacturing Processing Index. It's also seems to be dropping from 52 the previous month to 51.1, and while the service sector also fell from 53.7 to 52.9. This number will serve as what as a guide and also for investors to see what's likely to happen this week, and including also reading the consumers confidence on Tuesday, and also inflation measure close. These are the things that are so Federal Reserve also on Friday to see how all this will to play, because I tell you investor confidence is very investor and consumer confidence is very important in any economy. Down to Africa. If you look at Africa now, tell that Africa market is mixed, and good one that the NGS is also extending the bull run that have started for almost straight 4 days now to speak, after we're seeing a pullback for last week, a mistrend last week. We saw 2 days pullback and saw the market rebounding powerfully within that week, and that trend has also been sustained this morning. We're seeing that fund is also entering the market from below 58. I thought almost as high as 65, but as we speak now, as we come to chart, we also look at that. For our topic today, before we look at the topic, let's look at what is the market doing right now. The market, look at market data to get the market position as we speak. That will help us also to guide us to know what is happening in the market. If you look at the market, the market data right now, I've seen that the market is also in green as we speak. For me, it's a good one. Market is already going as far as touching 108,000. Last week, look at the 118,000 mark. As we speak now, market heading to 118,500. As we speak, market is trading at 118,334. 37, sorry, and which is a good market representing about 0.18%. Food for me is a good one for the market right now. And I think that if you look at the top gainers and the losers, if you look at the market bread, we're seeing the market bread is still a positive right now. Even at the margin is not much. We're seeing that we're having 23 gainers against 20 losers right now in this hour. as market is also ongoing. But that tells you that the market is really very, very strong right now, extending what we saw already in the month of May. This month is the last full trading week for the month of June, the last month for the first half of the second quarter, and we are seeing that the activities are looking positive. The month of June is already a kind of a dicey market, has come to be a market to reckon with what with high cap stocks, making new too high, and that has supported the index. And we expect that as we cross into the month of July, which is the first month for the second half of the year, and being also the month for earnings reporting season for half year result or second quarter, what we want to call it, we expect the market to change. On that note, the market is having a positive trend that has started last week. The market closed the week positive, and that trend has also been extended this morning. If you look at the chart quickly here, you can see that the market is also making a new high. You can see it here. This is a markup phase for those that were in the class on Saturday. You can see the markup phase here. The market is still going up. And when at the markup phase, the next thing you see after markup phase is for distribution. But you can see that other indicators are looking upward. But there's a kind of a little thing I'm observing here. Market is going up, but money flow is looking down. Even at this point, also have to keep a paper finger crossed and watch this market as we speak. I told you earlier that we have many gainers, that we have 23 gainers against what? Against the 20 losers for the market, internal or call it market bread right now. We'll look at our topic for today. Our topic today is what? The power of technical tools, in managing what? In managing, trade risk or trading risk, anyone want to call it. I'll tell you that this is what is very, very important for every successful trader to have at the back of mind. What are those tools that are we use in managing risk when it comes to what equity trading? You must understand those tools, and how do you understand those tools? How are you using it effectively to help you to protect your what? To protect your capital. Because I tell you that capital is king in any market you are trading, and that's why it is important that you need to also protect that capital when you are trading. But that's the only way you can be sure that yes, that your fund is protected, and when your fund is protected, you also invest with confidence. When you are investing with confidence, it's because we are looking at those tools that are going to help you guide your risk there, your risk appetite, and at the same time your risk decision. So that is why your stop loss is very, very important. But we are looking at the power of what technical tools in managing trading risk or trade risk, anyone you want to put it, so that you will know exactly what you are doing in any market, so that your capital will be protected and the trend in the market also will be what you can take advantage of, because you know the right tools to use at the right time. And those tools provide you a lot of information, because they allow you to manage to identify the risk potential, identify the potential risk in the market, and at the same time to analyze market data or market direction. And that also help you to know the strategy that you use to mitigate, also to kind of reduce your exposure to this risk. And that tools you need to pay attention is very, very important, because one, you must have your investment goal. It's very, very important. Because you have your investment goal, you must pay attention to those tools that are very, very important, very dynamic in managing your trading risk, because that is the only way you can stay ahead of the market. But when you don't have tools to manage your risk, you be tossed up and down by market forces, or you follow bandwagon in and out of your trade, and that is not the best for any successful investor or trader. You must pay attention to those charting tools, and to help you to identify and also interpret the market. And these charting tools are very, very important, and you pay attention to them, because they will help you to make informed decisions. And the first one here is for the price action. The price action is one of the charting tools that is very, very important. It helps you to identify a trend, and also to identify where the market is going. And that also we could also look at the volume. That volume is very, very important. Also, other tools you can look at is resistance and supply and resistance and support. These are very, very key. We must pay attention. And also, if you look at moving average is good for it to help you to confirm strength, and also to know the direction where it is a downtrend or an uptrend. These are to help you to catch up the potential breakouts or fake out in the market. It is these tools that will help you. That is the first one that you must pay attention for is your price action. And price action is what taking the price movement, just viewing the price, where the price is going. Because in that price action, there are candles that are telling you the psychology, the sentiment in the market, so that you know. But once you go to identify, the support and resistance level at any given market, it helps you to manage the risk, because in between the support level and the resistance level is what we call the value area. And for you to know that, yes, for example, that our market is experiencing a markup phase, you also technically see that, yes, if you look at this one, is the market trying to kind of side trend at this point? Is the market weak? Is the force pushing the market, is it weak at this point? But if you look at the chart this morning, the market has gone aside, 118,337. But to speak now, it has come back to all around 200 below, 118,300. It tells that something has happened. Is it, becoming a place that market cannot cross? Is it because of volume is trading down? You need to understand, because that's why volume analysis is very, very important. Because when you are looking at your support level and resistance, using your price action to know where market is going, why the volume is that you analyze to see the volume that confirms strength or of the price movement. Because if price is going up and there's no volume, it's a matter of time reversal is underway. But if you are seeing price going up, you are seeing strong volume, and that strong volume is a buy volume. Is that what market is going somewhere? That is why volume analysis, price action, resistance, and the support level are key things that you must pay attention to, so that you're able to manage the risk in the market. Also, it will help you to do timing also in the market, because once you're able to know where the market is going, with your money to see the strength of the market, it also helps you to manage risk accordingly, because timing will help you know your timing of your entry and exit, also at the time managing risk. Because that's why you must pay attention to all these momentum also indicators to assess only the overbought and oversold condition of the market, because this gives you information. These are very, very vital information that you need for what, for entering and for exiting. And that is why in managing risk, you will know when to hold your capital and when to plug it back. That's why you're buying to take position, your center also to do. Also, when you see that the risk in the market, you can put also to hold cash, because cash is part of the strategy. When you see that there's risk in the market. But what is happening in the mature economy now, with all this, you can see that most people are trying to work, but do not forget your stop loss in your what, in your position. Stop loss must be part of your what, your investment objective or your trade plan, because the stop loss will know exactly where you can also the optimal loss level that you want to, so that you can protect your capital. Once you first expect traders, you can also, and that is why setting strong support based on your support level or your resistance level is also very, very important. These are the technical tools that you need to know at any given time to help you work to catch out your support, your stop loss at any given time. Also, you must also pay attention to what is the reward to risk ratio. You must pay attention. If the risk is high, you know what to do. You can exit that position. You must also if you see that the market is somehow, you don't want to jump fully to the market. You call it position in terms of gradually. What I like to say, by stage by stage. It's a purpose, so that all that you want is also to manage your risk in the market. You must pay attention to risk management anytime, any day in the market. But that is the only way you can protect your capital, and at the same time kind of take your profit at the right time. And that is the only way you can survive any market, and that's why you must pay attention to it, so that you can stay ahead of the market again. Yes, no, we'll stop here for today on managing risk, but let's come back to see those stocks that I was saying that are showing strong momentum in the market. What are they, and are they going to continue in that direction? You must know, and also take decisions, so that it will guide you not to know exactly what to do in this kind of situation. You don't just say because market is going up. You must know what is in for you. Who are those stocks that are going up? Will they continue? Is it the time for you to sell them? You must also look at that. I believe those that are in the master, in the Q&A section yesterday, when I give the example of NACO, today as we speak now, NACO is already getting to 100 naira. And I said it like that stock will get 100 naira with ease. And when I said it, today, it's almost 92, 90 right now. But we want to look at those stocks. Let's look at the other time frame for the index for today's transaction or today's trading. This will a chart you are seeing a. Let's look at 1 hour chart to see the position of the market. 1 hour chart, you can see that market is just at this peak of almost at the, if you come to this level, market has touched almost getting to 118,000 something. But you can see that at that point now 1 hour can say it's trending here. You can see those form of cross through here. Market is not exceeding that point. And if you look at your MACD on on a 1 hour chart, you can see that market is telling us there's a sign of weakness here in the market. You can see it here. Market try to cough down, but money flow is also looking after. So you can see it here for 1 hour chart. You must pay attention to it because it tells you a lot of things. Then I could also look at what is the 30 minutes chart saying. When you look at the 30 minutes chart, what is saying? Almost the same thing. You can see that I've shown that as speak now, market is in red. You can see that MACD has also confirmed a bearish MACD money flow on the 30 minutes chart. These are things that you need to pay attention. Finally, look at what is it in 2 hours chart and look at the 4 hours chart. In 2 hours chart, you can see that there's already this is a sign that market ready to resist decline. And that's why you must pay attention to all this time frame. 2 hours, you can see in 2 hours, you can see that market is still good. MACD is still not bearish now, still bullish on the course above the signal line. While money flow is almost 64.9, which is also good. And this for 2 hours. But finally, look at the 4 hours before we go to other stocks that are on the top gainers. To look at what is happening in those stocks, in terms of the momentum, what investors should do with them. If you look at 4 hours chart, 4 hours chart also tell you that the market has moved to this level. We can get to this level before becoming weak. We can see that there's a sign of slowdown here, which is also if it's sustained whether it's a good sign to work. But if you look at MACD is still bullish and money flow is almost 70.5, which is also good. That money is entering the market looking at 4 hours. We'll come back to the market in 1 hour again to see 1 hour chart. You can see that two candlestick is still up here. If you are seeing it very well, you can see that the money flow as we speak now in 1 hour chart it's almost, you can see 80, but already signed here. You can see the sign here that the blue line is almost crossing the value down. You can see also here that we are seeing that very before you know it to cross down to break out the histogram. But let's go back to the other stocks and we're going to look at two stocks here. Let's quickly look at what is happening to Ella Lake at this point. Ella Lake continue the trend also in the previous day. Let's see how far it will go and see the momentum behind that stock right now. That will give us an insight. Let's look at the Ella Lake. Ella Lake, can see Ella Lake now on the day chart. Can see. Let's go to this 1 hour chart. Let's look at the stock on the day. You can see on the day chart. Can see that the move almost touch 858, 86. You can see the market has broken out the last resistance level here. You can see it here. This is a new trend, but I'll tell you that this trend you have to play with caution. Even as money flow is still below 60, but still looking up on this powerful on a day chart. We'll go to 1 hour chart to look at it. 1 hour chart, you can see that it has moved but still flat and that one it might sustain at the end of the day. And also MACD is positive on 1 hour for the stock. These are the things you must pay attention to. Then another stock we want to look at. Let's quickly look at NACO and NASCO. I know why I say let's look at them quickly. These are stocks that we are seeing another trend entirely in them. But let's see how far NACO is going. We can see that NACO in 1 hour has gone up almost touching 93. You see that it came down, tried to resist decline. You can see it here for a 1 hour chart. But if you look at the 15 minute chart, 30 minute chart for for NACO is trying to resist the decline. Within this 30 minutes, you can see that negative here, but up now. I see that money flow is also low, but MACD is still positive on NACO. But if you go back to 1 hour a day chart, you can see the position. But even it came down as low as almost touching 80 before going to this level 93 now as we speak. That is what we are seeing here on the chart. You can see that it has been almost 93.50. The way for me, you can see the trend here that the stock will remain above the T line. Even when it touches the T line, it bounce back. This will give us what we use to gauge the market at the time. Even when we are looking at the earnings, pay attention. What is the T line saying? Is it below the T line? You can see that the stock comes to be like it will stay back again above the T line. When it comes down here, before it is above the T line, side trend. Now you can see that it's also on a markup move. But after this markup, what we say, you see what you kind of distribution phase. But if the earnings come and beat expectation, you might not see the distribution phase continue to the 100 that is heading to already. Can is heading to somewhere. You can see that MACD here is positive on the day chart. You can see it here. But if you also go back to look at your 2 hour chart for the stock, you will also see that the stock on 2 hour chart, 1 hour is still very, very strong. Here you can see above the T line in 2 hour chart. You can see it here. All this way for me is a good one. MACD is positive. You can see where on what on the 1 or 2 hour chart. You can see the trend is not a bad one. Finally, let's look at the cost of our time and spend. why I'm taking time to look at it, that hopefully we're not having class, today will be the last class for the week, as all eyes are what on the the Q3 master class coming in Saturday. The participants are preparing, the facilitators are preparing. We also are going to focus on it to make sure that the right stuff is picked for the participant, and also study the market so that we'll have a fruitful and successful celebration for good 9 hours, starting from 9 o'clock to 4:30. It's a session that everyone on this platform should not miss. You should not make time to be there. And those that took advantage of the discount that closed yesterday, I saw even till midnight, people were still paying. See that Nigerians know how also to take advantage of this. Nobody has they want to take advantage of, but those that miss it, you can still afford it to pay the 100,000 between now and that Friday midnight also, so that you can also participate in the session. This session, I'll tell you that we're seeing a lot of opportunity in the market, like what we discussed, give an insight what we're going to discuss in the yesterday class. We're going to open a lot of opportunity in the market. Those facilitators that are coming, these are not just developers, these are traders in the market, these that manage funds, these are also that use different tools, technical and fundamental, to decide that they're going to share all these and also tell you where the stocks they are looking at. You can also look at it at the same time. People want to look at the NASCOM now. Let's say NASCOM has gone up even as I have gotten to almost above 65 now. You can see where it's going, and that also send the signal to investors in the market where they should also pick their tent right now, as the market's already in the last week of the month ahead of what window dressing that will start coming in from now. You can see that the stock, on the 1 hour chart, you can see that where it is now, it's already up here at 66 naira 90 kobo. If you can see, that's what we're seeing in the stock right now. It has done 90 kobo on it. You can see that the volume is coming out for NASCOM. You can see the volume here on the 1 hour chart. You can see this positive money flow. So on the 1 hour chart, if you quickly look at the 2 hour chart for stock, also will give you more information on how you can see that it become better, that strong movement was now. Look at I tell you that you see a stock trading above the T line, and when it comes down, it touches it break above. Look at it, see that stock is having momentum. That's why it's above the T line. I said the line is forward to read the support and the resistance. But now that it has been supporting the market, the momentum what in the in NASCOM tells you that is how you must look at the market at any given time. On this note, because they are giving me a sign, I will say thank you and look forward to see you next week, Monday, hopefully. Like I said, tomorrow on Wednesday there will be no class live session, and on Friday, why there will be no Q&A on Friday on Saturday because of the master class for Q3, and all the participants are really preparing for a bomber harvest at the end of class. At the same time, to also give them, because one thing is that education or training help you to build what confidence. That's why after the class you take action, you look at your portfolio. These are the things we're going to review in that class. I look forward to see you all there. Thank you